Ready to learn a bit more about estate planning techniques that could save you some tax dollars? Hi there. My name is Kenner French. I'm with Vast Solutions Group, the nation's premier tax and financial engineering firm for entrepreneurs. We have clients all over the country, ranging from Florida to New York, Southern California to Washington State. We've been around for over 50 years and with clients who've had issues ranging from tax mitigation, retirement issues, and other issues of concern for entrepreneurs and retirees. Now, TOD, JTWROS, what do these obscure acronyms mean? They're shorthand for transfer on death and joint tenancy with rights of survivorship, two designations that permit automatic transfer of bank or investment accounts from a deceased spouse to a surviving spouse. This automatic transfer of assets reflects a legal tenet called the right of survivorship. The idea the surviving partner should be the default beneficiary of the account. In some states, a TOD or JTWRS beneficiary designation is even allowed for real property. When an account or asset has a TOD or JTWROS designation, the right of survivorship predeceases a beneficiary designation made in a will or a trust. These are advantages to having a TOD or JTWROS account and disadvantages as well. Now, they usually avoid probate. They also have beneficiary designations that define a direct route or account transfer. There's rarely any need for such assets to be probated. The individual financial institution has a contractual requirement per the designations to pay the balance of the account funds to the surviving partner. In an unusual instance, an exception may apply. If the deceased account owner has outlived the designated TOD, beneficiary or beneficiaries, then the account faces probate. What happens if both owners have that type of account and they pass away at the same time? In such cases, a TOD designation applies for any named contingent beneficiary. To be technically clear, transfer on death signifies a route of asset transfer, while joint tenancy with right of survivorship signifies a form of asset ownership. In a variation on JTWROS called tenants by entirety, both spouses are legally deemed as equal owners of the asset or the account while living, with the asset or account eventually transferring to the longer living spouse. Do these designations remove an account from your taxable estate? The answer is no. The designation makes those assets non-probatable assets, and they may save your executor a little money and time, but it does not take them out of your gross taxable estate. That's important to note. In fact, 100% of the value of an account with a TOD beneficiary designation will be included in your taxable estate. It varies for accounts titled as JTWROS. If you hold that title to the account with your spouse, 50% of its value will be included in your taxable estate. If it is titled as a JTWROS with someone besides your spouse, the entire value of the account may go into your taxable estate unless the owner has made contributions to the account. Now, how about capital gains? JTWROS accounts in common law states typically get a 50% step up in basis upon the death of one owner. In community property states, the step up is 100%. Could gift tax become a concern? The answer is yes. If the other owner of a JTWROS account is not your spouse, if you change the title on an account to permit that, you are giving away your percentage of your assets. The non-spouse receives a gift from you. If the amount of the gift exceeds the annual gift exclusion, you will need to file a gift tax return for that year. If you retitle the account in the future, so you're again the sole owner, that constitutes a gift to you on behalf of the former co-owner. They will need to file a gift tax return if the amount of the gift tops the annual exclusion rate. Now, TOD and JTWRS designations are designed to make account transfers easy, not to be said easily. They simplify an element of estate planning strategy. Those accounts they're not cheap substitutes for wills or estates. If you have multiple children and name one of them as the TOD beneficiary of an account, the child will get an entire account balance and the other kids will get nothing. The TOD beneficiary can course, divvy up those assets equally among siblings, but in doing so, that TOD beneficiary may run afoul of the yearly gift tax exclusion. As you create your estate, respect the power of these two designations. Since they override any beneficiary designation made in wills and trusts, you want to double check in any will and trust you have to make sure that you aren't sending conflicting messages to your heirs. Very important to note. That aside, those designations or these designations can represent a convenient way to arrange the smooth, orderly transfer of account balances when original account owners pass away. Now, if you have any questions about these specifics or anything as it relates to estate planning, please contact us, 888-808-8278, or check us on the web, www.vastsolutionsgroup.com. Once again, my name is Kenneth French, and it's indeed been a pleasure, and hopefully in some way you found some value in this. If you have, please contact us. At the same time, if you know of someone else who'd be interested, please pass this video along. We love that. We love working with clients. Speaking of clients, obviously, if you look at our website, you've seen a number of recommendations that have come our way. We do good work. Our consultants know exactly the situation you're in because many of us have tackled these same issues. Once again, Kenneth French, and it's indeed been a pleasure to spend time with you.